Welcome to Thoughts on the Market. I'm Michael Zezas, Morgan Stanley's Global Head of Fixed Income and Thematic Research. Today's going to be a little bit different. We're exactly 6 days away from the U.S. election. The race is neck and neck, and I want to sketch out what investors should expect in the next couple of weeks. It's Wednesday, October 30th at 10 a.m. in New York. This is an historic election, and the outcome remains highly uncertain. What's more, there's a good chance we won't know the winner on election night due to close vote counts. My colleagues and I have spent a lot of time on the show trying to give our listeners a sense of how the election might impact different economies around the world, as well as markets, sectors, and specific industries. But today, I want to take a step back and highlight a few things that investors should keep in mind right now. To sum up what we've covered so far, the key policies at stake are taxes, tariffs, and immigration. Congressional composition will be critical in determining the extent of tax cut extensions in either win outcome. Domestic consumer-oriented sectors are most exposed to tax changes, while clean tech is the most exposed to potential efforts at a repeal of the Inflation Reduction Act. Macro impacts vary depending on the scope of policies and their sequencing, but we see downside risk to growth in a Republican win outcome. As our listeners know, a candidate needs 270 electoral college votes to win. Former President Trump's most likely path to victory is through the Sun Belt, Arizona, North Carolina, and Georgia, while Vice President Harris's most likely path to victory is through the so-called Blue Wall, Michigan, Wisconsin, and Pennsylvania. In terms of the Senate, polling and prediction markets have consistently implied higher likelihood of Republicans winning control. Democrats are defending more seats in states that Trump won in 2020, as well as more seats in states Biden won by a small margin. As far as the House of Representatives, Republicans need 11 of the 25 toss-up seats to maintain control of the House, and Democrats need 15. The generic ballot is the most reliable House indicator in our view. It's a political poll which asks not which candidate you plan to vote for to represent you in Congress, but rather which political party, Democrat, Republican, or Independent, that you would support. The generic ballot historically correlates with the House winner, and it currently favors Democrats. All this leaves us with two key takeaways. First, don't expect conclusive results on election night. Early vote data from key states reflects our view that vote-by-mail levels are lower than in 2020, but still elevated versus historical levels, and it may take days to get all the mail-in votes counted. Second, full election results may differ from early returns. Why is that? A candidate may have a deficit in election night vote counts, but still come back to win the race once all ballots are counted. This depends on two key variables: the share of the electorate who vote by mail, and the skew among those ballots towards Democrats, a blue shift, or Republicans, a red shift. So again, we need to be patient and wait for the final results. And when that happens, we'll start digging deep into the post-election outlook for the economy and markets. Thanks for listening. If you enjoy the show, please leave us a review wherever you listen to podcasts, and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.